This is the CMC Markets Connect Volatility Report. The US dollar lost ground at the start of the week. Downside was broad-based. The dollar index is giving back recent gains, and there are arguably some doubts creeping in as to just how aggressive the Federal Reserve can now afford to be in its policy tightening plans. The greenback has lost almost 2.5 cents against the Canadian dollar since the weekend break, leaving the pair to show some of the most elevated levels of price action for the asset class. One-day vol came in at 11.35% against 10.07% on the month. An accompanying pullback in US bond yields off the back of those Fed questions was seen as being behind a flurry of buying activity in precious metals, with silver coming out ahead in terms of price action. The underlying advance to resistance level seen back in early August, just below the $21 mark, with daily volatility printing 46.8% against 34.88% on the month. The idea that interest rate hikes may be tempered was sufficient to lend support to US stocks across the board, but those in the consumer discretionary space were amongst some of the biggest beneficiaries. As a result, CMC's proprietary basket of outdoor living stocks was a standout for price action, adding meaningful gains at the start of the session. One-day vol came in at 58.63% against 47.71% on the month. Finally, Vodafone's share price moved higher yesterday, with markets evidently applauding the news that the company was in talks with Three to create what would be the UK's biggest mobile phone operator. The stock ended up closing a relatively modest 2.5% higher on the day, but this was sufficient to drive daily volatility to 95.8%, more than double the 46.19% recorded over the last month.